get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by Denim. As a business owner myself, I personally know the importance of financial stability and preserving cash flow to help navigate through any freight market. With Denim's comprehensive service offering, you now have an all-in-one financial partner whose platform includes factoring, payments, freight audit, document collection management, and analytics, which help keep your business financially healthy and increase your team's time to focus on revenue-producing activities. You can also take advantage of Denim's free credit check, which they perform on all of your customers. And Denim will proactively reach out to you if they spot any signs of credit deterioration. Finally, Denim always pays your carriers first. As a broker, this is imperative to preserving your credit score in the market, which ultimately helps you become a broker of choice to your carrier partners. Are you ready to learn more? Visit denim.com to schedule a demo today. Just do me a favor and let them know that the Freight Coach sent you. This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you. What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Friday, you guys. Happy holiday weekend as well. So get ahead of everything. Do not wait. The rates will not go down. If you are trying to book same-day freight, get that stuff booked up and go home and enjoy this weekend with your loved ones out there. We all deserve a couple of days off. And my marketing team has advised me that I need to bring this up at the beginning of the show as well. If you're not subscribed, you guys, subscribe to the show, okay? If you're feeling really ambitious after what you hear today, which you're going to for sure, rank the show on iTunes and Spotify, because if you see value in this, chances are your network's going to see value in this. And I always see value in this show, especially today's episodes. And this is our monthly Financial Fridays, you guys. Business, finance, access to capital, all of that stuff is going to be ever increasing and ever important in the coming weeks and months and everything else. And, you know, you always need to be financially literate inside of your business. And based on the show I had yesterday, it's a phenomenal follow-up to be talking about what we talked about yesterday. So I got my man Sean back on the show with Denim. We're going to be talking about working capital optimization today. So Sean, thank you so much for joining me.
Hey, like and subscribe. All right, everybody, just come on.
Dude, I usually wait till the end of the show to say it. And I've been informed I should say it at the beginning and the end of the show, because as much as I think everybody sticks around for all 30 minutes, apparently that doesn't happen, which they should. But I digress. We'll talk about that at a later date.
I'm glad you're taking the feedback, though. That's makes me happy.
Dude, you know, you have to, Sean, at the end of the day, because, you know, like I try and talk about every single day. There's no playbook to any of this stuff. Contrary to what some people are trying to sell you on, there is no playbook to business. There is no playbook to entrepreneurship, social media, any of this stuff. It's a giant, you figure it out as you go.
1,000%. And one of those things that doesn't necessarily come so naturally and easily to everyone, like some people who can be great salespeople or some people who are great shooters. great finances is something that that typically takes a lot of work, and so we're here to help
Yeah.
you.
No, and that's the thing, man. And ironically, so I'm in an entrepreneur group, and this month's topic is about, finances and stuff in your business. And, we deep dive on that, right? Like when's the right time to invest in, is it your systems? Is it your personnel? Is it, buying a new building? And they get really granular on a lot of that stuff. And, and then my guest yesterday, for example, they represent, like, they do freight audit on the shipper side, right? So they represent like a very large portion of the large enterprise shippers in the United States. And we were talking about how do you kind of handle extended payment terms, right? When your customer who you do 1,000 truckloads a month with comes to you and says, hey, I know we're net 30. We're pushing it to net 90 now. So it's like, how do you do that? How do you spot that? And, you guys of all people, and it was funny as I was talking to him yesterday, I'm like, the fact that I get to go back to back with this stuff this week is top notch for me, because that's a very real conversation that a lot of people are having. And you guys study this data all the time. And I know we've talked about this on the show earlier this year.
Totally. And I put in our notes that I sent you earlier, the working capital 201 class, right? Because I think last time we spoke, it was a lot of like, how do you know how much working capital you need? How do you think about cash on hand? Where do you get access to cash? Like, I think those are all the things that basically keep the business running, right? And so what I'd love to spend some time with everybody on today is see how to tune the dials to be able to extract as much profitability back into the business as possible. The big thing about solving a working capital problem or being able to optimize a working capital problem is sales have to be rolling. You've got to have enough of an established business to be able to get credit from anybody. And, once you're able to solve those two things, then you can start to think about how to make this machine work for you instead of the other way around.
So, speaking of that, like how can somebody assess what the true cost of getting money is, right? Like, is it, comparing, the APRs of like a line of credit or utilizing factoring or something like that? Like, what are some of those ways that you can identify that?
Yeah, APR is the annual percentage rate or basically the interest rate annualized of whatever it is that you are purchasing. So like for factoring, that's typically like a 30-day turn on an invoice. But if it takes 45 days, they might charge you a turn and a half, right? For that particular thing. Now go get like a cash advance from a credit card, cover your eyes when you on the dotted line to be able to get that money. It's going to be very expensive, right? That stuff can be 40%, 50%, can be kind of wild. And then things with assets, right? Like a truck loan or a mortgage or something like that. Those are hard assets that retain their value. And so those interest rates are the lowest because they're basically the most protected if you're a bank that's looking to some action on the money. So like, think about it like I know we were talking about this, the waterfall, like the tree structure, right? Like the most secure debt, the cheapest debt that you get is like asset-based debt, which is like hard things that there are markets for. Houses, trucks, cars, I guess, but cars sort of depreciate quite quickly.
Yeah.
And then your next level down is like your AR line, right? Like I've got invoices that I want to get paid on right now. This is similar to factoring. Sometimes you get a line of credit. That maybe is like, call it 20% annual, 12% annual, 25%. It really depends on kind of the size of your business, right? And then the next one down is maybe you can put predatory factoring in here. People that are charging 6%, 5% on a monthly term, which is like 35%. And then you're like, I need money today or else I'm going out of business to be able to make payroll. Give me like a cash advance, unsecured cash advance. That's probably, you're looking more like 50, 60% there. So like, think about your tree. All the money has a purpose, right? Like there are plenty of folks who have, I mean, I'm sure you hear about this in your entrepreneurs group, the fetal position moments where like, you can't make payroll. It's tough out there, whatever. The cash advance, you need it. You got it. Yeah. You should have it. Like it's better to have that than kill the business. So like it all has a purpose. They're all different levels of risk. There's different costs associated with it. And so, don't take a 30-day invoice and use a merchant cash advance to be able to put fuel in your tank, right? Use the invoice to be able to acquire capital for cheaper. So
Yep.
that's how we think about that.
No, and that's, those are very good points. And, we were actually talking about that, or not we were getting told about that, right? Because most people, when they find themselves in that situation, Sean, it's because it is too late, right? And then they're selling off equity inside of their business. And, and it's like, I think in today's Instagram entrepreneur culture that's out there, you see these massive exits, right? Like these companies are raising 50 million, 80 million, they exit for $600 million. But then by the time the owner, the founder who put in all the work and the sweat equity, after everything's said and done, there's a $600 million exit, and they clear $5 million in cash once it's all said and done, taxes, all of that
Sometimes,
stuff, right?
maybe, if any, right?
Yeah.
Right?
And so it's
maybe more common than not.
I look at a lot of this stuff, Sean, as like, I would rather grow my business slow and steady over time and have a war chest of capital in my bank, so I don't have to fire sale assets at certain times and pull different levers just to cover payroll, right? And again, this is a controlled environment. This is all perfect world scenario talk out there right now. But I truly would rather take the slow and steady approach to it. I would rather do this and save as much cash as possible out there. So when the market does dip, then maybe I'm buying a building that I want for cash on my terms at that time, because I can do that. And, so it's like, when we're talking about like working capital though, Sean, at the end of the day, what are some mistakes that you think are made when you are layering that capital, right? Because you were talking about that merchant loan and then factoring and everything else. So like, what are some of those mistakes that you think, or is there a lever somebody can pull earlier so where they're not going to payday loans at 180% interest rate?
Here's the first thing that I would say. This is a very emotional problem, right? Like, you look at the money in your bank account and it either gives you a good feeling or a not so good feeling. And I definitely recognize that you feel better with more cash that's sitting in your account. No doubt about it. What I'm going to challenge the audience to think about, and I'll challenge you all to think about, is like, if I have too much money in my bank account, am I not putting enough of it to use? If I don't have enough money in my bank account, am I flying too close to the sun? There's a sweet spot for the size of your business, and you should be able to put that capital to work so that you have enough to be able to capitalize on a rainy day, or you avoid a situation where you have too much and you end up upside down. I will say the mistakes that people make are on either end of that band. So and they're of different magnitudes, right? Maybe you're not growing fast enough. Maybe you're overpaying money. Like there are some things, having too much money is bad, right? And so make sure that you're using the right stack, put point in your kind of capital stack, or the part of your waterfall for the assets that you have available to you. And then the other thing I would say is, if you don't need the money, don't pay for it, right? So just because you can get a next day advance from your factoring company, but you already have, call it 10% of your expenses sitting in your savings account, like think about delaying those payments so that you can reduce some of those fees and capture more profit on the back end.
Yeah, I'm glad you brought up the emotions of this stuff, Sean, because that's the thing that none of these studies and all of these, college professors and all of these high-end things that are done never account for. They never account for the human emotion and the human decision-making ability when they're being told, if you don't pay this in the next 10 days, your home is being foreclosed on and you're going to lose everything. You're going to lose your business. Your wife's going to divorce you. Your kids are never going to talk to you ever again. Everyone's going to think you're a failure. None of this stuff ever factors into a lot of these perfect world controlled environment studies, right? So it's like you're going to find yourself in that situation where, and I know I found myself in that situation plenty of times. It's why I save as much as I do. I don't have it all figured out by any means, you guys, but like, especially inside of my business, I set a certain percentage aside every single month into business savings to help manage if there's ever delays in payments that come out, or, a repair needs to be done, and stuff like that. Like, this is just a small example, but I had to get the windshield replaced in my work truck. it was $800 to do that. And my
Yeah.
insurance isn't going to cover that because then my premium goes up and there's a bunch of shit that comes along with it. Right. But I had the cash to pay for it. So I paid for it. And it is kind of like having those rainy days. But again, it boils down to the, the phase of business of like, I feel like everybody goes through this, Sean. You go from not making any money to holy shit, I'm getting money coming in. And then you spend recklessly. And then you get that realization of like the revenue drop hits and you're like, shit, I never want to go through this ever again. And that's the phase that I am now past, right? Where I'm like, no, I have to look at this like I am inside of my P&L every single month. Right now, I am like, why am I spending this money? Are we actively moving this? Do we actually need to spend this money? What can I do? Because there's a lot of small killers out there inside of your business that you don't notice because they are $60 charges, $80 charges that is less than, maybe if you're a trucking company, is way less than you're even spending on fuel. So it gets lost in the P&L, right? So it's like for me, when we're out there and we're talking about that working capital hierarchy, you got to start like from an expenditure standpoint, from my standpoint and my experience, start from the ground up. We'll go from the smallest expenses and work your way up and see what can we eliminate along the way? What redundancies? Do you actually need that building that you're renting right now? Do you actually need that truck that you're paying for? Can you get away with another way to, lower your overhead? Because that's what I feel like a lot of people right now, when we're at the situation we're in the freight market, people are looking left and right. What can I cut? How can I lower my overhead inside of my operation? And that's one thing that I'm really, really focused on is how can I stay as lean as possible for as long as possible?
Here's what I'll tell you. I got a couple of our clients are exceptional, very, very sharp. And they entered into a factoring relationship with us, and they are factoring 20% of their freight, maybe 50% of their freight. Maybe they're factoring 80 or 90% of it with like a 28-day delay on their payments so that they're basically getting charged, right, 0.5% or something on the invoice, really, really small numbers. And they do that because they are putting their capital to work by paying carrier payments themselves, having us run collections for them, and being able to run the machine with their own capital, which is uncomfortable if you don't have a good grip on it, right? Because you're looking at your bank balance and it's not as high as you. I think I got more money than that. But what you do have is access to all of that AR that you're continuing to build every day in a relatively liquid market if you have a factoring relationship already that's working for you, right? So like, just because you might not have 50 G in your account at a given moment, maybe you've got 25, it's because maybe you've got 75 Gs out in the market waiting on invoices to come back. And so if you play that game, right, and you can like turn those dials, like we talk about it with our risk team, we do some relatively sophisticated risk modeling, and like there are plenty of situations where we're like, hey, we are over collateralized on this client or on this debtor or whatever. Like we should take more risk here. Like we should raise credit limits. We should provide some extended terms optionality. Like we should be sharper about this because that's really how you get really smart, especially when money is turning at a we'll call it a variable rate, right? You don't know when the next buck is coming in.
So like talking about that though, like how can we time out our payments? Like again, if we're going to talk about, you brought up that cash flow and, having 50 grand, 25 grand, whatever that looks like in there. How do you recommend people go about payments, all of that stuff? Can you go to some of your creditors or, your credit card company and change the payment dates to kind of like structure that stuff out to where it's like maybe spread out throughout the month as opposed to everything's due on the 1st, the 15th, or the 30th?
Yeah, I think the biggest thing that you'd want to do is you'd want to get a grip on how your customers pay first. So like maybe they cut checks on Fridays, maybe they cut checks every day, maybe they cut checks twice a month, right? Mm-hmm. And so you can see your pay terms can be as quick as 28 days because you caught Nancy on the right day when she was in the office and she was able to get your check in and sent it out. Or, maybe you didn't and she was actually on vacation. And so now it's at 45 days. And so if you get grip on your last show, right, on the shipper pay terms, then you can do things like back into the cash that I need on hand to be able to support my operations. And if I don't have it, then the capital that I need to be able to go out and get from somewhere to be able to keep things moving in the right direction. There's this neat formula in Excel called MAX, M-A-X. And so you can go across a row in Excel to equal max, and it'll give you the highest number in that particular row. And so there's your highest cash out in that given day, right, of the month. And so that's the amount of money, plus 33% or whatever that you should keep in your bank account all the time to be able to cover it. So like, look at money in, money out, shortfall or surplus, where is it? And then what's the biggest number that we need to be able to have in on hand in order to be able to make that happen and the wheels continue to turn on the business.
So what are some specific red flags that should automatically be notified? You're like that, like this triggers this is a red flag. We gotta, especially from like a factoring decision and stuff like that.
Yeah. The things that make me uncomfortable, right, is if your credit utilization is growing, but your profits are not. Mm-hmm. Like that's just like right out of the gate, something that's a red flag for me, because you're booking unprofitable freight. You're not in a position to be able to, you're not making more money by utilizing more credit. You're basically, the term is like picking up pennies in front of a steamroller, right? Like that's basically the type of situation you're finding yourselves in. So like that is one that makes me uncomfortable. I think a couple of others that make me uncomfortable is that maybe you're beyond a turn or two in your savings accounts. Like you don't really have enough to cover a bad month, right? Or a claim or something like that. Like we call it reserve accounts. Like if you don't have a reserve account that's healthy, like that really makes me uncomfortable, especially if you cannot replenish it fast enough. So I think in a similar way, it's like you're not continuing to stack kind of funds onto the business. That stuff makes me uncomfortable. Another thing, this is a little bit more nuanced for the freight brokers out there, and I think same for the carriers, is if you're accepting delayed pay terms, but you're still have the same invoice amount and you're still booking carriers for the same amount, you're paying for that money, right? Like that's coming out of your pocket. So
what do you mean by that?
I mean, if I have a shipper that I'm running freight for, $1,500 bangers, right? And they're paying on 30-day terms, and then they're in a really tough spot. And so they're going to start moving 90-day terms. And I'm still got the same $1,500 and I'm still booking the same carriers for $1,200. Like that money is going to have to come from somewhere, right? That 60 days of float is going to have to come from somewhere. And so if you're paying the same amount and your money out is the same amount, you're basically eating the difference, which doesn't feel like a healthy relationship.
No, I agree with you wholeheartedly on that, right? And that's the biggest misconception out there when people are, I'm not here to say all brokers operate in an ethical way and stuff like that. But when I hear,
you're not going to take a stand for every freight broker out there that's doing the right thing.
Because there's shitty people out there. There really is. I'll be the first. I might be the first one to openly admit it. But at the end of the day, that what you're describing right there, Sean, is not talked about, right? And to me, it's like the whole broker transparency thing comes to my mind right there, where it's like, listen, if we have net 90 payment terms out there and we pay you in net 30 as the carrier, you don't look at the debt we have to hold and the exposure that we have inside of our business, because most individuals out there look at the transaction that they're attached to the brokerage with, right? They don't see the fact that that broker might be moving 100 of those $1,500 loads in a month, and then we might not get paid until September for that, and we're doing it in May and stuff like that, right? So it's like there is that added risk and there's that added exposure out there, and that's why I get really passionate when I hear brokers have no risk. We have tons of risk out there. Granted, we don't have an asset that we have to pay for out of pocket in the event that there's a breakdown or stuff like that, but we might be holding. I personally know some individuals who are owed millions, plural, millions in receivables on a monthly basis. And if that creeps up, it could bankrupt them, right? So it's like there's a ton of risk that goes on with it, and there's a ton of red flags that people don't pay attention to, Sean. in the sense of like, until it's too late, more times than not, or unless you've been through that situation before, because most individuals out there have a very hard time going to a customer and saying, hey, we're at 40 days to pay. We were at 30. What's going on here? That additional 10 days, like, are you going to pay me interest on that? Are you going to do something on this? And most people won't do that. Or at some point, you have to have a hard conversation and be like, I am going to walk away from this, because if I don't get paid, I can't work for free.
I got CC'd on an email yesterday. You would get a kick out of this. I got CC'd an email yesterday from a shipper talking to one of our clients, who was not being responsive on the AR that they had open. And they finally got back to us and they said, hey, cash is really tight right now. Can we split the difference on this? I'm sorry, what? Split the difference on this? What do you mean split the difference? This 80% of my costs went to the carrier, and now I paid it out already. And so now you're asking me to split the difference? Like, this is crazy. What do you think this is? That honestly blew my mind. And I think that I understand that there's the truck on the road that's got to get paid for it and all that, but there's AR that also has to come home too, right? And so like plenty of brokers out there have assets over their head, AR with risk over their head, that might cost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 plus trucks, right? So there's plenty of risk in the game to go around. Imagine as a carrier hauling a load, and then at the end the broker goes, hey, things are really tight right now. Can we split the difference on the rate that you already agreed to? That was a new one for me. That was pretty wild. I laughed about that later.
It really is, man. But that's a very real conversation. And again, I know brokers have done that, right? Like brokers have done that to carriers after they deliver the load and said, hey, this happened.
Ridiculous.
And it comes in with the rate reduction, Sean. Like if you go, some of these brokers are like, oh, the driver sneezed, $500 rate reduction. Oh, hey, the driver, coughed in front of the shipper, $250 rate reduction. Like that shit is out there, man. And so it's like, it's one of those strategies that I don't understand why it's played, because you're just putting yourself in a really tough situation out there. But I feel like ultimately a lot of what we're talking about here today can be solved by properly managing your cash flow and like by properly setting your business up for financial success to be able to have the right working capital out there. And I feel like it is, dude, like working with you guys out there, I would all but guarantee you guys are, heavily invested in the success of your guys' clients. And, from one way or another, you want to see them win out there. So it's like, if you're a business owner and the term working capital is foreign to you and you guys are working with, Sean here, I schedule a call. You guys, like, it is truly on you to build up your coffers and your cash reserves and have a business savings account and an emergency fund and a business checking account. Have all of those buckets in there. Maybe throw a tax account on there as well, so you set a portion aside every single month inside of your business to help improve your working capital. Because at the end of the day, you guys, cash is king, no matter what. Bitcoin, all this, cool shit that you see out there in the old interweb, cash is still king. You need cash to operate.
Totally agree. And I think CDN dropped a good note in the comments about if shippers are going to fluctuate based on the day to pay, they're going to go find someplace else to go. And I think this is totally fair, fair point of view. And I think if you are the tail wagging the dog, where you're just like taking whatever comes at you and you're going to eat the differences on whatever you see fit, then that's probably going to happen. I think what we would encourage people to do, and plenty of our clients have done this, they set up these three-way calls between the customer billing department, the client, and us. And we talk about process, and we talk about invoices, and we talk about ways to be able to fold into whatever your kind of processes look like so that we can get a sense of predictability. And you can meet your commitments on a 30-day term that you already agreed to, and then we're able to provide you everything that you need to be able to make those payments on time. And if you can't, and if the terms are different, then let's talk about the terms being different, whatever they are. But like, let's at least get to a point where, because like plenty of times people throw an invoice over the wall and they just hope that it gets paid. And I just don't think that that's real life either, right? Like there's going to be work in here. You're going to have to get on the phone, right? And it's going to have to coordinate an email. The conversation might be uncomfortable for a little bit, but like if you're providing great service and you're doing great work, you should be paid for that.
Dude, it's a hard lesson. I feel like a lot of people will find themselves in at some point in time, and no one's going to fight your battles for you at all. You have to do this. And again, like this is to go back. I've talked about this on the show, having contracts with all of your vendors and everything about payment terms and stuff like that, and have it all laid out there, you guys. If you're going to be late on your payment, 10% fee, whatever that looks like. And yeah, of course, do the right thing. Reach out to them. Hey, what's going on here? You know, and hell, even if you're afraid to have send an uncomfortable email, if you utilize a thing like QuickBooks, you guys, they send automated, like you can structure it inside of QuickBooks. If you're within 5 days, send a friendly reminder. Hey, you guys, payments due in 5 days. Day it's due, send another. Like there's ways to kind of do that. But again, you got to stay on top of this stuff. And if people are getting slow, if they're not paying you, if they're extending stuff out, you're going to need to have a hard conversation. All right. And it might
be process. It might be like,
I think
assume
more times
best
than not.
intent, like always. You're here to help. I'm here to help you. You're here to help me. Let's work together.
I think it is, Sean. I would argue it's process more times than not. Like, I don't know. Yes, there are bad people out there. I am an adult and I understand that. I don't think it's at the level that some people want to make it out to be. I feel like most businesses out there want to pay you. You just never took the time to find out how they are supposed to pay you or how you are supposed to invoice them. I think that is probably a glaring gap in a lot of people's operations is they've never took the time to talk to their customers to be like, hey, how do I properly invoice you? Is there specific steps that we need to follow to ensure a timely payment so there is no drag out there?
Totally agree. Good to see you, man.
Good to see you too. And we are out. Hold on. Robert just put that flip side. If a shipper's focused on the lowest rate, sometimes we need the customer. Our brokerage has 125,000 or more in credit available for their company. This reminds customers.
Oh, I like that reminder. It's like, hey, we're invested in you. You be invested in us. I understand that you want the lowest rate. And so what allows us to be able to provide the lowest rate is to be able to make sure that we're able to provide all the aid and our credit stays open. I like that take too. It's like, hey, we're both in this together.
Yeah. Listen, we're giving you hundreds of thousands of dollars a month to play with here. We're just as invested in you as you are.
I like that take.
That's a really good point. Sean, thank you so much, man. Dude, these are literally my favorite shows because I, as somebody who's got everything on the line to make their dreams work here, I understand the need for being well-versed in a lot of this because it is only a matter of, it's not a matter of if, it's a matter of when you find yourself in this situation. You need to know what levers to pull. You need to know who to talk to and how to make this stuff happen. So thank you so much. How does it mean to reach out to you guys though, Sean?
Find us at denim.com, or you can email me or find me on LinkedIn, Sean@denim.com, or find me, Sean Smith. My name is Sean Smith on LinkedIn. It is not Product Sean, although I think the Denim folks would prefer I change it.
You can change that.
I don't know,
man. Just go to Product.
I might.
Dude, Product Sean at denim.com. Dude, that fucking dad joke rhymes. Product Sean at denim.com. Dude, that should be your literal email now. Change all of that. Take note. All right, you guys, that's going to be it for today, ladies and gentlemen. As always, if you got value in what you heard, which I know you did, and you're not subscribed, subscribe to the show, you guys. If you're feeling really ambitious after this one, rank the show on iTunes and Spotify, you guys, because if you saw value, chances are your network's going to see value as well. I appreciate you guys. I love you guys. Have a safe and happy holiday weekend, and we'll see you on Tuesday.
Came back with a bang, window down, yelling out